Hey traders, David Frost, LazyGapTrader.com. In this video, I'm going to show you one example of a morning gap trade from this morning that worked out picture perfect. Obviously, you see a sneak peek of it on the screen. It was Kroger. You see where the horizontal line is on the screen. And then you also see what happened when price reached the horizontal line. It reacted from that horizontal line in the upward direction. Therefore, 28.38 was in fact support for Kroger, which produced a nice intraday trade. But let's take a step back. What exactly is this gap trading strategy all about? Here's what it is. As day traders, we need opportunity. In order to find opportunity, we need stocks that are moving. Once we identify the stocks that are moving to create the opportunity that should put money in our pockets, we then have to find, and here's where the rubber meets the road, we have to find the highest probability price level so that we can get the best entries for our trade and the quickest reaction, meaning we can put the money in our pocket the fastest as we can. That's the objective of this day trading business, isn't it? So the real opportunity exists for traders that can identify the highest probability price area where these stocks that are moving will first be drawn to like a magnet and have a price reaction from in the other direction away from that magnet. That produces the trading opportunities we're looking for. So as a result, I teach a course at LazyGapTrader.com where traders learn everything they need to know in order to trade this gap trading strategy successfully. Which stocks does it work the best with? What type of volume are we looking for? How much of a gap higher or lower in the morning are we looking for? How do you trade them? What should profit target look like? What should a stop loss limitation look like? And here's the holy grail. Traders who take the course learn how to calculate and identify these exact price levels. For example, on Kroger, $28.38. Traders who take the course learn how to calculate and identify that same exact price level. That's the holy grail. This is how we find the best entries for our trades. So we're going to get back to the chart and look exactly what happened in detail at KR this morning. However, I want to point out the other thing I do, which is give traders who want them an opportunity to get my gap trade sent to them first thing in the morning. In fact, it arrives in the inbox at 9 a.m. Eastern Standard Time, 30 minutes before the markets even opened for business. So this morning, trading was a little bit light in the pre-market. We only had 3 potential morning gap trading opportunities on the board. So be it. We have to take what the market is willing to provide in the way of opportunity. So we only want the highest probability trades on the board. These were the 3. The only one that hit its price level so far was Kroger, KR. You see gap lower. Support levels are $28.38. And then I gave 2 secondary levels below that. Stop and profit target is about 30 to 55 cents. These are minimum profit targets. Then I go on to say the first 2 support levels are close together. Traders can take a partial position at the first and add if KR continues lower. That's another way of saying there's a lot of support in this general zone. Therefore, we can take a crack at the higher level, not be afraid to take the trade, but even if it trades lower, still not be afraid to put on the second half of that trade because we're expecting a price reaction in the other direction. We're back on the chart of Kroger. Let's take a look to see exactly what happened. Yesterday, the stock closed all the way up at $31.74. This morning, the stock was getting hit pretty hard. It was down roughly about 10%. So getting a nice haircut, we identified a specific support level of $28.38, the one you saw from the email that went out to traders a half an hour before the opening bell. You can see what happened. The stock came in close to that level and had a pretty decent bounce. Now that's covered in the course, so traders understand the ramifications of that, what to do with that, what not to do with that. But you can see the importance of this price level, $28.38. As soon as price got there, the market or Kroger at this particular time found stability, and you saw the buyers come in, price rallied, and it rallied all the way up to make a high in this candle of $29.10. That represents over a 70-cent rally off the price level given out to traders before the opening bell even rang. That also represents about 2.5% in just a matter of minutes. And then you see price came back in later on, but it doesn't matter. We're out of the trade. We have a specific objective on the trade, and in the course, there's an entire video module that teaches traders how to get the most out of these trades, how to turn some of these trades into risk-free, emotionless trades. Here's the most important thing that traders learn, or the takeaway from the course. Traders learn the why behind the strategy. Once traders understand why this works, and they understand why certain stocks will be attracted to certain price levels and how to come up and calculate where those price levels will be, once traders understand why it works, they have a different expectation of what's likely to happen when price reaches these price levels. Therefore, they have a different comfort level when entering trades. So you're removing guesswork and you're adding confidence. You remove guesswork away from trading and add back in confidence, and you change your trading for good. Look, this is a strategy that you can use each and every day for the rest of your trading career. If you want to learn how to trade the gap successfully, come over to check out the course at Lazy Gap Trader. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.